You expect to see $12,000. Instead, you see $37. Your mortgage payment is due. Your car payment is due. Your heart drops into your stomach. Can the IRS really do that? Can they simply take money out of your bank account? The answer is yes. But the way it happens is probably very different than what you think. I'm James Duff with Duff CPA Tax Resolution, and today we're going to talk about the IRS bank levies, what actually happens, and one fact that could make a huge difference if you're facing IRS collections. For many taxpayers, a bank levy is a thing that they fear probably the most. Not an IRS letter, not a bill, not even a tax lien, a bank levy. Because suddenly, this isn't a piece of paper. This is your money, your rent, your mortgage, your retirement, your emergency fund. Here's what most people don't know. The IRS generally does not simply log into your bank account and take the money instantly. When a levy reaches your bank account, the bank typically freezes that money in the account. But here's the important part. The funds are generally held for a limited period before being sent to the IRS. That waiting period can create a window of opportunity. Most taxpayers have no idea that window exists, and unfortunately, many don't discover it until it's too late. A bank levy is generally not the first thing the IRS does. There is usually a sequence. You owe taxes, you receive notices, more notices, collection notices, requests for payment, opportunities to respond. Eventually, if the issue remains unresolved, collection actions may begin. The levy is often the result of a problem that had been building for months or even years. I've had taxpayers call my office in full panic mode. They log into their account, the money is frozen, they assume it's gone forever. Sometimes that's not actually the case. Sometimes there's still time to act. Sometimes there are collection alternatives available. The problem is that every day matters. Waiting another week can completely change the outcome. Here's something else that many people don't know. The IRS doesn't necessarily know how much money is in your account. When the levy hits, it attaches to what is there at the moment. That's why some taxpayers are shocked to discover that a large deposit made shortly before a levy can become part of the problem. Timing matters a lot. If your bank account has been levied, don't panic. Don't assume all options are gone. Don't ignore it, and don't wait. The sooner you understand what's happening, the more options may be available. Every case is different. The amount owed matters, the collection stage matters, the notice matters, and the timing matters. The biggest mistake that I see isn't the levy itself. The biggest mistake is waiting until the levy happens. Most IRS collection cases give taxpayers opportunities to act before things reach that point. Unfortunately, many people don't respond until the money is frozen. If you're worried about a IRS bank levy or if your account has already been frozen, don't try to guess what's happening. At Duff CPA Tax Resolution, you'll work directly with a CPA or an EA who can review your situation, explain your options, and help you determine the best path forward. Call Duff CPA Tax Resolution at 203-589-4077. I'm James Duff, and in the next video, we're going to answer another question that taxpayers ask every day. The IRS says I owe $50,000. How do I know if they're right?